Hello, this is Mike Swanson of Wall Street Window. I got a very special and timely interview today with Jordan Roy-Byrne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, Mike, I'm great. Thanks for having me.
Well, thanks for coming here because I really want to speak with you in regards to gold and mining stocks because you've been spot on with what's going on with them. You foresaw the recent drop in gold below $1,200, and gold stocks, of course, got hit pretty hard. But GDX has been trading in a range, that's the gold stock ETF, for 2 years now, with support around $21 or so. Resistance was in the $23, $24 range. It's a huge or a small trading range for a huge and long amount of time, and my 200-day Bollinger Bands contracted on them to such a low I couldn't find a comparison of historical data. And when something does that, it usually leads to a move that's huge and meaningful. It lasts for months, and I was thinking it would be a breakout, but instead in August we turned down. But GDX is above 18, which was the low of December 2016. So there's a lot of hope out there that this is actually could be a false breakdown and could lead to a buying opportunity that's just shaking people out. We could turn around, and this could be similar to the bottom of 2016. We can shoot higher, see gold go up to 1,300, then 1,400, then 15 and 16. So there's some talk of that out there, but I'm a little scared myself, and when something breaks like this, it's really spooky. And my favorite indicator is the comparison of the performance of the gold stocks. The gold, it's lagging, which is not good. The gold stocks really haven't been able to rebound since that drop. So what do you think is going on here?
Well, I mean, you said it, Mike. I mean, I remember back in the spring, I was expecting that we're going to have this big breakout. And then when gold failed to break out and the stock market was holding up pretty well and didn't go that much lower during the weakness earlier in the year, I realized if the stock market's not breaking down here and gold's failing to break out, what does that tell us is likely to happen later on? And then also, if you looked at the monthly and quarterly charts for gold, because most people just look at daily or weekly charts, but if you look at the monthly or quarterly charts, it was clear they weren't going to get through that resistance anytime soon. And as you noted, GDX was trading in a range for at least 18 months, maybe even a little bit longer than that. And I mean, Mike, you've been around long enough to know that when a market's trading in a range, the volatility is compressing, as you noted with the Bollinger Bands, and it breaks in one direction. That's a trend. That's a break that's going to lead to a trending move. It's not going to suddenly reverse course. And so we've had this significant breakdown in the gold stocks, in GDX and GDXJ, and this breakdown led to a extreme oversold condition. Whether you look at technical indicators, breadth indicators, sentiment indicators, they've all hit real extremes. And in the last couple of weeks, we've seen the market rebound, although in recent days, that rebound has kind of faded. As the short term here, I don't think the sector is going to plunge to a new low again. I think we're more likely to maybe make a mini double bottom and rally for a little while. So I'm not bearish per se, over the next couple of weeks. But I do think that eventually at some point the sector, whether it's going to be in a couple weeks or in a month or two, I think it's going to set up for another move lower because that's where the major trend is. You can't argue it now. The primary trend for precious metals is lower, and I don't think this is a trend that's going to last more than a year. So I don't think this is something that's going to last multiple years here. But I do think it's something that is going to last, for at least several months, maybe 6, 9, 12 months, who knows. And after the sector here gets less oversold, it corrects the extreme oversold condition, then it's going, then the odds are probably going to be that it's going to make another leg lower. So that's pretty much where my views are now as far as the trend in precious metals.
Well, if this 18 is obviously on GDX the critical support level, and there are people buying, and but if it breaks it later and goes to 17 or lower before the end of the year, that's going to build up tax loss selling, and I know that's typically what happens at the end of the year, that people sell the sectors or the stocks that are lagging and do that. So that's something I worry about. In other words, this really seems like a critical time for GDX. It's got to get back above, I don't know, 21 or something to start to get all the damage gone, and it's hard to expect it to happen, frankly, the way it looks now. But what would it take really to turn this thing around for good? Do you think?
That's a great question. I think it's going to be given where we are right now, it's going to be when the Fed stops hiking rates. Looking at over the last 60 years, there's been about 12 rate cut cycles, depending on how you measure it. But I looked at 12 points where the Fed started cutting rates again, and I looked at how gold stocks performed with those with the end of those rate hike periods. So I looked for I plotted the Fed funds rate going back 60 years, and then I looked for peaks in the rate. And so there's been about 12 peaks in that rate, 12 times where the Fed stopped hiking rates, and that was the end of the cycle. Mike, 10 out of those 12 times, gold stocks rallied an average of 185%, with the minimum rally being 54%, and the point in time when that move began was an average of about 1 month after the peak in the Fed funds rate, or a median time of 2 months. So to me, when the Fed, when they're at the end of this cycle, whenever that is, that I think is going to be the point when precious metals are ready to begin a bull market. And obviously, hopefully that point will go along with a point where the sector's really oversold, but it's sitting at really strong support. Maybe gold's trading around 1,000. It has really strong support around 1,000. Looking at the gold stocks, GDX, GDXJ, maybe they're trading around the 2015, early 2016 lows. That's really strong support. Maybe they're trading around those levels when the Fed stops hiking rates, when the Fed makes its last rate hike in this cycle. So those are the conditions that I'm looking for, which tell me it will be time to be super, super bullish, because we're just not there yet. Yes, the sentiment and the market being really oversold and hated, all that is good right now, but fundamentally, there's no reason to buy precious metals. The fundamentals are negative. I mean, real interest rates have been stable to rising for the last several months. And at the same time, the U.S. stock market has been healthy. The U.S. dollar has been strong. So there's no bullish factors in play for precious metals right now. And yes, the market looks ahead and it anticipates, but it's not going to anticipate positive things for precious metals until it thinks the Fed is done hiking rates. And I don't think we're anywhere close to that point. I mean, it could be, we might disagree, but I think it's going to be some point around the middle of next year. Who knows? It could be a little bit before, a little bit after, but that's what I'm looking at.
Well, I think the good news is that the U.S. yield curve is very close to being inverted. The way things stand now, it would probably be inverted if there were 2 more rate hikes. So that would suggest we're towards the end of the rate hiking cycle, at least.
Yeah, the yield curve being inverted, I think, is a step in the process, but that's not the point where you want to get super bullish. The point is after that inversion, when the Fed changes course. It's when the yield curve starts sloping higher, when it's steepening, because the yield curve has been flattening, and that's bad for precious metals. When it's steepening, that's bullish for precious metals. And so the inversion is not, it's not necessarily bullish for precious metals, because we've seen inversions in the yield curve in the past, and most of the time there's a lag. Like usually what happens, the yield curve inverts, then, at some point after that, whether it's 3, 6, or 9 months, I don't have the data, but the market peaks, and then a little bit after that, the economy rolls over. So the yield, you're right to point out the potential inversion that's coming, but to me, that's just a step. It's kind of the first step in the process. If that's the first step, then the next step would be the Fed talking about ending their hikes, like seriously talking about it.
Well, as long as they're moving a step in the right direction, closer to the turning point, that's good enough for me. Because it's been so. I mean, this stuff has done nothing for 2 years, and we had this breakdown. It's just something to see. Goodness.
Well, and you mentioning the yield curve, that's something I actually want to look at. I want to go back over the last 60 years and look at, let me look at the inversions and see, is there a lag between when gold and gold stocks bottom? So I don't have that data handy, but that's a nice little project I'll pursue.
Well, when you do that, I'll have to get back with you and see what your findings are. I mean, I only have the data going back for 20 years or something on stock charts, so that's all I've looked at myself. But
yeah, I mean, that's the unfortunate thing is most of the data that's available. Fed funds data you can get going back pretty far. I do have some historical data on the 10-year, so I can whip that up, but not in a couple seconds. It would probably take me a couple minutes. But no, I'm very interested to see how that looks actually, because when we're only looking at the last 20 years, that's not giving us a real full picture of what's really going on, what's been going on over the last half century or so.
Well, one thing about this moment too that bothers me about gold is that we've been seeing the dollar rally, and I noticed on the week of June the 14th, a lot of markets around the world turned down. Gold turned down hard, commodities turned down hard, and the dollar rallied. And I suspect there could be turmoil, or there is. We've seen it in Turkey and Argentina now this week. That could be causing money to go into the U.S. dollar, and maybe it's hurting commodities in general too, and hurting gold. So that could be part of what's happening also.
Yeah, that's an excellent point. And we were talking about Jim Rogers beforehand, and I believe his thesis and you were mentioning this. He's not the only one. There's several other prominent people who think this, that essentially the dollar is going to get really, really strong. And at some point, as the dollar is rising, gold will go up alongside with it. And so it's kind of counterintuitive, Mike, but when the dollar gets too strong, that's actually bullish for precious metals. Now, it's not bullish right away. You have to wait for that. You have to wait for, in this case, we have to wait for when the Fed's going to stop hiking. But with the dollar getting too strong, it'll create a problem. It'll create problems. It'll affect the stock market eventually, and that creates a need for more easy monetary policy, the kind of policy that's bullish for gold. So you're correct that the dollar strengthening is starting to cause problems around the world. And if that keeps going, then eventually it's certainly going to coincide with some kind of bottom in precious metals. And I don't, I'm not smart enough. I don't have a crystal ball right now, so I don't know when that's going to happen. But the dollar is certainly going higher. That's initially initially it has been negative for hard assets, commodities, precious metals. If it keeps moving higher, it'll continue to be negative for those markets. But at some point, it'll be bullish for gold because it'll force the Fed to stop hiking rates and maybe even go into cuts at some point. And if that happens, then even if the dollar's still going higher, that's still bullish for gold. So that's how you can see the dollar moving much, much higher, but gold going higher at the same time. So that's a lot of prominent people have that view, and it's hard to that could be in motion right now. It could be in the early innings, but it could be in motion.
Well, I think it's something we can't, like you said, we don't have the crystal ball to predict the future, but it's more being aware of these things. So if they do happen, we recognize what's going on. I think that's the key to it. And I'll let you go. I know you're busy and so forth, and hopefully get back together in a couple of weeks and find out what your yield curve studies have uncovered.
Yeah, my pleasure, Mike. So it's always great to chat with you. Thanks so much for having me on.
Oh, and for anyone listening, go to Jordan's website, thedailygoal.com, for more updates from him, and you'll see them before we do another interview like this, I'm sure.